Obviously rejected off the center of the weekly range, ladies and gentlemen. Showed somebody this chart earlier. They're like, "Well, what are all these lines? Well, you know what are these lines back up here that caught price action? You know, wide price action stop here, wide price action stop here." So I go and I just explain to people that this chart's nothing more than price action volatility ranges and distribution levels, Laplace and normal distribution, 4-hour and daily. Got a nasty little rejection, 4 wicks into the center of the weekly. Then PA has definitely fallen off since then. Traditional markets had a good day. Close now, SPY up 2.5%. So is NASDAQ. Good stuff. Gold and silver doing what gold and silver do. They're good in electronics. Okay. Other than that, worthless. It's definitely not sound money. Yeah, I'm looking for this to close up in the weekly range. Right. Bears are definitely going to try to keep it below here. Rejected off the 1SD down, right? Top side of the 68.3 daily Laplace. And that's what ran it up into the weekly. Got a little support on the top side of the 1SD, but eventually, right, broke down through the bottom of the weekly range. Then kicked up. I mean, this new 4-hour candle that we just got kicked right off the 4-hour 68.3. Whoop, back up. Now it's back on top of the daily 68.3, top side of it, not the bottom. So yeah, be interesting to see how this closes. Looking at the distribution chart, right? Win, mean, reversion. That's what we all want to know. This weekly candle has already dropped to the 68.3 plus distribution range to the downside already, and earlier pumped up to the 1SD. So not only, and this is something as traders, when you're going through these charts and you see that 1SD on the weekly is lining up pretty much perfectly at the center of the weekly range, it's kind of a no-brainer that price action is going to get kicked down from there, probability-wise and volatility-wise. And that's exactly what happened. So that is interesting for sure. I didn't notice that yesterday. 21,711. Yeah, it was at 662. Probably when it went up there to hit, it was really close to that number. So yeah, this is going to be one of those things where are these probabilities going to take over? All right, because right now the probabilities are from this weekly drop from 48K that we're going to get back up inside the bottom side of the 95.4 Laplace distribution range on this projection. Now, is it going to do it this week? You got the 3SD normal distribution right below it, literally $40 below it. So, don't know. Don't know if it's going to be this week. If we do, if we get a weekly candle that closes back up inside this distribution, in my opinion, the returns are going to mean revert, right? Here's the reverse mean. So obviously, we're up here on the weekly charts. This is the slow game. This is the slow game. If we go over here on the daily, I gotta back that up 2 more. Let's turn the RML off. Let's see here. I did like this read that the projection was given on the daily.
Yeah.
For a local bottom, anyway. I mean, obviously, this thing can go deeper, but
yeah, we're scalping. That's good.
all right. So, like on the weekly, we dropped below the 95.4. Once that happened on the daily, woo, we've been visiting the 99.7. Finally, after 4 wicks into it, we're getting a bounce here on the daily. Getting a little bounce. Earlier, when this candle was full, I thought we were going to make a run here, my buddy. make a run up here to the 95.4 Laplace on the daily, which is right there, out of sight, right here. Boop. 22,189. I mean, got within about $500 of it. Not bad. But I do like this. I do like what I'm seeing on the daily. There's no doubt about it. Especially pop over here on Coinbase. Boom, boom. The Fishers, the Fishers are definitely in lockstep. I like that. Losing correlation to the downside on the entropy. Volatility is contracting. Need to stay significantly negatively correlated. Slope would be nice as well. I do like the contraction happening on the percentile of entropy. It is definitely significantly negatively correlated. Slope is down. I'm going to see what happens with this returns oscillator. All right, because we built all this bull div. All right, and then boom, got the little pop. So let's see if it's going to continue. Issue being, price action kind of got halted there below this high. So we're definitely creating some hidden bear div from the beginning of the move on the daily. But like I said, I'd like the log return z-score being on the downside. And the Fishers are in lockstep. It's happening on the 4 hour. Let's throw a projection on this. Let's see. Just to get an idea. This 4 hour move. We'll start it right here in this baby. 16 bars. There we go. Yeah. Right below the 95.4. Didn't like being outside of it, obviously. Made another run right there to get outside of it, but yeah. Could we come down here and test the 68.3? Sure could. That's right back down there, and there's the low again. 18.8. Yeah, there's I mean, you got some bear div from the high of the returns oscillator here. All right. There's definitely some bear div. The 4 hour Fishers are definitely starting to all turn down too. So are they going to bounce on the mean here? We'll find out. Because the correlation on the entropy is to the top side. There's just no trend right now. No trend at all. What a nice slow burn. Look at the contraction on the volatility. Heading positively correlated right now. I want this move to continue. We're going to need some expansion. 4 hour. You okay, buddy? Good God, I'm dealing with so much bullshit right now. Nice, nice, nice. 90 minutes got some hidden bull. We like hidden bull. Hidden bull good. Yeah, all the correlations on the entropy are to the top side now. Just there's no trend. That trend to pop. Hmm. 45. Yeah, put that on. Boop, boop. Load up chart. Definitely takes the longest. UPM. It is a big code. Massive code. What are you talking about now? Yeah, reverse wave trend. Yeah, 29. Definitely rejected off of it. Yeah, and that's what we're going to want to see. All right. First, let's see what 4 hour was just there. Just can't remember. Come on. Populate, you sucker. It's going to start on the 4 hour first. Definitely slopes changing. Need to close 4 hour candle above this reverse wave trend. Does it bully price action? Sure it does. We're rejecting right now. And that's another thing, right? So if you're looking at the 4-hour UPM, and then you were looking at the weekly, the center of the weekly price action volatility range, the weekly 1SD to the top side, they are literally all right in the same area. It's a no-brainer. It rejected here. We've got some support here on this 9-length log return moving average, though. See, we just got a wick right to it. Wick right there, supporting it. We need this 9 to cross this 33. This guy's talking crazy. The only crosses that matter, man. We're not using exponential or simple moving averages. We're using moving averages that actually matter. Log return. Reverse wave trend. Koi. RWT. And then obviously the red dotted, that's a reverse Fisher. It's got reverse Fisher, reverse wave trend. You know, there's 5 plots on that UPM you can set up. I just have it set up like this. Got 1 reverse wave trend, 1 reverse Fisher, 3 log return moving averages. That once you start using them, you will soon realize, oh, wait, we can still use MAs. Sure you can. If they're not lagging indicators, like exponential and simple moving averages. When they're moving averages based on log returns, price action follows log returns. Log returns make the moves first. So when you have indicators like this, they don't lag. I got a funny ass message. Let's give this dumbass some airtime. What did this dumb shit say? I was mentioned in a script comment at Crypto Cyclops. You lost money because of an indicator. Did you not backtest it first? I mean, what the fuck? Shit, I never answer any of this dumb crap. But it's like, what is this person even talking about? I got a newsflash. I don't lose money when I'm trading.
The circus of clowns is large.
The circus of clowns is large, and you know it's freaking somebody from the main circus, I'm sure. And let's see here. Where are they at? Where is that circus? I know where they're at. Hold on. Got a picture of them. They just. Now, what the hell is it not popping up for? Hold on. Well, there it is. There's the clown show.
That's right.
There they are. There they are. That one, that little clown right there, he slipped over, came over to take a peek, and the rest of them were like, "Hey, what are you doing over there? Come on back to the dark side."
To the shame shed.
Spank bang.
Or the inverted cones of shame there around their neck.
Yeah. Just great areas when you're looking for confluences with all these indicators. You're not going to find this with traditional TA. I'm telling you right now. You start using this stuff, you're going to start seeing a lot of confluences in areas that people have never looked for before, right? Number one, they're not understanding distribution levels and price action volatility ranges, which I'll argue to the end of the day, right? A lot of people in trading, age old, like to call these pivots. This is ridiculous mindset. It's because they don't understand volatility. That's the problem. So when you understand how to use this correctly, it plays a major role with the distribution levels, in my opinion. People can do whatever they want to do, but the proof is in the pudding. I show it time and time and time and time again how powerful these levels are. Early in the day, you get the bounce off the daily price action volatility range. Later in the day, you get the rejection off the center of the weekly price action volatility range. It just happened to be the weekly first standard deviation to the top side. Happened to be the 4-hour reverse wave trend. A lot of things right there. A lot of things. Good stuff. Back over here. You know what? How far are we on the 12? I like the way that 12-hour price action looks, to be honest. I do. Reverse wave 25.
Yeah.
Let's see. Yeah. I mean, we had this bull div. I tell you what. This returns oscillator on the 12-hour drops below the zero mean. I mean, we can start building some hidden bull. This is how these moves start, too. Any moves. To the downside, to the upside. It's all divergence, right? It's going to start. You're going to get this move on the 12-hour. It starts with some nice bull div between returns and price action, right? Now, where the returns oscillator is for the low that was right there on the mean, the low of price action, this can create some hidden bull. And hidden divergence is a continuation divergence, a continuation of the bull div. That's how this plays out. For all the div haters out there that don't understand it, you don't understand it because you don't know how to use it. You don't know how to use it because there's a high probability you're using RSI or stochastics or MACD or any other wide range of indicators that are
Early
lagging.
indicators.
Yeah,
RSI.
makes no sense. Relative strength index.
Cool, man. We're definitely not teasing anyone for not knowing what acronyms like RWT mean. For sure not. Definitely not, Matt.
And we have an RSI. It's built on returns, though.
Yeah.
Not on the relative strength of price action. This is what boggles our mind over here. It's like people don't understand the returns. I didn't. Once I caught on, though, a few years back, it was on. It was on. I started to see. I definitely started to see through the trees. Right? That's the problem with traditional TA. You can't see through the trees for the forest.
Yeah.
It's like when you start using indicators that aren't lagging, everything changes.
Yeah.
That's why you'll get people from traditional TA, they'll come over and they'll be like, oh, those indicators are stupid. They don't work. Look where they're coming from. They're not going to understand this stuff. You got to come over and give this time. You got to shit can the traditional TA. It's just going to confuse you. Because when you don't understand something that's going on in the charts, because you're attempting to read the VEPs, all right, volatility, entropy. Jesus, I got lost. Probability.
Probability and statistics. VEPs.
The VEPs.
The VEPs.
Of course, you're going to get lost. You got to
Yeah.
give it some time. You got to study this stuff. You really do. And once you realize what's going on with the volatility, when you correlate it to price action, how it is directional. Entropy correlated to price action is directional. Percentile of entropy correlated. It's directional. Variance. The most simple indicator we have. It's just variance. It's a spread of data around the mean. When Bitcoin's data set spreads away from the mean, the variance is going to tell you whether or not it's an outlier, whether it's positively or negatively correlated. Very directional. And when you throw the outliers in there, it's going to tell you the strength of the move. I can go back on every outlier on the 5-minute chart. I can go back on every outlier on the minute chart. And I guarantee you, if you throw a projection on that move, you will see that fat tail event every time. That's why these outliers are so powerful. It's literally telling you, hello, we're having a fat tail event. We're having a fat tail event. So yeah, every one of these little moves, top side, downside, downside, downside. I mean, they're gonna show. And this is on the 12-hour. We drop this to a 5-minute, and they're all over the place. Every one of these fat tail events, when you see that variance turn pink or whatever colors you have yours set to, it's not like not like I'm freaking, these are my actual favorite colors. These are the colors I see well. I have vision trouble. So these colors, and an old friend back in the day, who ended up being a full-on freaking retard, helped me get these colors together early on. I didn't know any other coders, and he was helping me code some indicators. Coded my original strat that dummy stole and renamed it. You can have it, buddy. It's traditional TA. The difference, though, is I was using the 369 philosophy in traditional TA with everything I did. And I've always been able to just take profit. So, yeah, man.
A note about traditional TA, like it's also one of the big craps of traditional TA is the whole notion of using leverage. And people talk trash to us all the time about why do you tell people not to use leverage? You shouldn't do that. People want to use leverage. That's what they want to hear. And all this, you'll get more views on your YouTube videos if you tell people to use leverage. Like, yeah, if I tell people to use leverage, I'm going to be telling them to go get wrecked because they don't know what to do with leverage, let alone how to actually take profit on it. And like, it's just ridiculous. You see all these guys, shoving leverage onto TA traders like it's candy.
Right.
And it's just such a dangerous thing to do. It's crazy. And crypto to use leverage is just, you have no need for it. I mean, look at this chart. Why would you need leverage on something like that?
Yeah.
Unless you're just greedy and have no time left or something. And you're just taking your YOLO shot to life or something. I mean, it's just crazy.
I go lay down. Go on. Go lay down. I'll check you more. Go on. Go. I'm working.
Smart traders don't really need leverage in crypto, that's for sure. They really don't.
No. And that's what, that's why, I'm over in that other Discord. Now, if I pulled several people, not pulled them, I'm not even trying. I'm not over there freaking shilling Alpha Trading or people ask. I'm like, there we are. I highly recommend the lower level if you want to join. See if it's for you. While all you YouTube Jimmy's out there trying to sell you everything under the sun, tell you he knows actually what the market's about to do. And if you really want signals, you can join my Patreon and I'll just hook you up.
Yeah.
And those clowns will long a position and short a position. And then say he was right the whole time.
Some of them will even show you they're losing positions because the amount of money they're getting in clicks to their referral links obviously makes it worth it for them. They don't care. It's like monopoly money to them. And they're showing off getting liquidated because they know it gets insane clicks. And they're showing off, having crazy losing positions and this and that, and just like being extreme. Like being extreme doesn't work for people. It's a quick way to get wrecked. And the only people that can really do that are if you have a million or 2 million or whatever followers, and you're getting many Bitcoins a week in affiliate links from people clicking and depositing on your exchange link, then they don't care. They'll toss in a 20, 30 Bitcoin trade, and they really don't care if they lose it. Because they'll just make it back next month, right? Yeah. But if you're not in that situation, which most people aren't, don't be stupid with your money.
Yeah. I had somebody asking me, well, what's an approach? Well, obviously, yeah, it's bad to use leverage, but what's an acceptable level of leverage to be using? And I'm just like scratching my head going, what the fuck are you even talking about? None. There is no acceptable level. Then, I go on to explain, it's like leverage is for non-volatile markets. That's what leverage is for, i.e. fucking Forex. You can get 500x leverage.
You get 1,000x leverage trading commodities like soybeans and rice. I mean, really.
Yeah.
But like in crypto, sure, you can use it, but it's just crazy. Like you don't need it if you're not greedy and you go in and out of fast moves. You don't need it.
Okay, here's a 2.3% move, 1 15-minute candle on Bitcoin when it was running up to the center of that weekly range. 2.3.
Take profit right there.
Yeah.
Just boom.
Let's see. Where's
that every day? 2% a day, you'll literally beat every market. Tons of people trading on the stock market. You will beat the 2% gains every day.
Yeah.
And this happens all the time.
here. Let me check something real quick. Forex. Get some pound yen going. What's that? The daily? Let's see. Let's take it's nice down.
Do you trade this pair? It looks like it's tradable as hell.
2.3. So you just saw a Bitcoin 15-minute candle. That's a daily pound yen candle. Same percentage. All right. And
African, I definitely trade forex from time to time, man, because
this,
it's exactly what you're looking for. Exactly what you're looking at. Like,
yeah,
look at this thing.
this is a lot of volatility for Forex too. And this is what I tell people. Hey, you want to learn how to really read these indicators, take your time, get you good. I mean, dude, go to Forex, go trade some Forex. These moves are undeniable. Most of the moves in Forex, I mean, holy crap. But therein lies the problem. You know, you got a very non-volatile market. So that's why people use leverage in Forex. But if you want to start using it in crypto, oh my God. And people just don't understand what's going on. They don't think they're being scammed by YouTube Jimmy. YouTube Jimmy's literally got YouTube videos showing you how to use leverage, showing you to go to exchanges that offer that leverage, where the exchanges are literally trading against their customers.
And they see every entry in stop loss,
Yep.
stop loss limit entry, market entry that's listed, so they know exactly where to go to get your money. If you have a stop loss set, if you're over leveraged, I mean, they literally have.
Big enough percentage piles up, either liquidation points, stop losses, or whatever. That exchanges, they will freaking run a train on the customers, man. They will liquidate them.
They sure have the money to do it. Not like they're lacking the bitcoins to go do some stop loss hunts.
Yeah, P-Funk's got a good point. Yeah, thank God. No shit. Can you show me, please? Laplace on yearly. You know what? We can't. There's not enough history. That would be great. We can't even do it on a quarterly chart, let alone a yearly. But if you let me put this back on the index. Is that the index? Yes. Put this up on
Yeah, there's a purpose.
quarterly.
Um,
Hello.
you can do 12-month time frames. I mean, you can do even longer timelines. Depends on the asset you're looking at. But I mean, you know, there's at least 12 months in there or whatever.
There we go. I mean, that's just beautiful. I'd love to throw a projection back here. There's just no history. You can't. You can see the normal distribution barely populates. Only goes back, about 5 years.
From a date. Yeah, you can. I mean, sure, you can throw Laplace back as far back as you can, as it can go.
Yeah. So this is an interesting chart. It looked a lot healthier before. We're having a massive quarterly. Look, I mean, look at this quarterly candle.
Yeah.
It'd be interesting to see at the end of this month what happens. Do we backfill this sucker back up to like 43, 44K, 46 is the top? Definitely could. Definitely could. We're not shocked at all.
Quarter ends in another 8 days or something. 8
Yeah.
days, 9 days.
Yep. That is a one hell of an ugly quarterly candle, but yeah. Is it the bottom? Everybody wants to know. Is it the bottom? I mean, literally, you got the 2SD normal distribution was at 19.4. All right, so that candle went through the 2SD. The 1SD is at 31.8. There's a 68.3% chance this quarterly candle pulls up in the next 10 days to like 31. That would not shock me at all if this thing pulls back up inside. The higher time frame you go, the more powerful these levels are. So we will see. We'll see. Just go to a monthly. Let's see here. Yeah, almost. Literally almost ran a 3 SD on the monthly. So powerful move. So, and again, by the end of this month, 20.9. Yeah, I mean, we're right there. We're literally sitting on the 2 SD on the monthly. We're a little bit below it right now. But there is a 68.3% chance by the end of the month, we're back up above 26K. And that's on a monthly. Quarterly, it was what? What did I say? 30, 36, whatever it was on it.
And that 26K happens to be right at the projection boss of the weekly, I believe. At the second SD down, or the second band down.
Let's throw this monthly after the COVID done, the old scamdemic. Yeah. What are they trying to roll us into now? Some monkeypox bullshit? When are people gonna wake up? I'm tired. My back hurts from carrying all the knuckles. Let me see. What did I say? I guess
You're gonna stick it on. I don't know. I was just mentioning it on weekly. The 26K. It's right there.
Right.
But you're gonna stick that at some nowhere.
We're gonna do this from the top though. I haven't done this from the top. 8, just to see where we're at on the monthly projection. This is about as good as it gets, Coy. That was Coy that asked, right? No, that was Imars. Jesus.
Yeah, like on the literally the weekly candle. We're to the top of the second Laplace down is right there at 26 something. Pretty much the top of this candle.
Trying to pull back up inside this 95 for Laplace by the end of the month. I mean, that's only like 21.6. And we were just there. 68.3% chance by the end of the month. Yeah, we just talked 26.2. That would make sense too. See what happens on this projection. But here's what I can do. Somebody wanted a long-term projection. We love showing this. Let me get the number. And this is what on a monthly. I don't even know if it'll go back this far. September 15. There it is right there. What is it? 82. Let's see. Might only be able to do it.
Should be.
Let's see. Yep. But here's the thing. See, this is Laplace. Here's what people don't realize. Well, it's not really showing a lot, right? Well, back in September of 2015, nobody was using Laplace distribution. So you go into the indicator, you change it to normal distribution, and shit starts to come real clear, right?
Oh.
And then Laplace started taking off right after the Rona dump.
Yeah.
That's when it started to get popular.
Yep.
So
Laplace
put one there, and then
kicking in right about here.
Yep. You
But
can see it. You put it on there. It's like, oh yeah.
so look at the move, right?
Yeah.
Here's that last month, December 2017. Tried to go outside the 2 SD, but do you see what? Look at the blue dot. To the dollar. Bitcoin ran up outside the 2 SD and nailed that current monthly candle in December of 2017. Hit the 3 SD. Hit the 3 SD. Where did it pull back to? Dead on the first standard deviation normal distribution. There was a 68.3% chance. Whoop! Closed right there. Gave one more shot. Rejected off where? Top side, 68.3 Laplace. Then the move down to 3,100. When everybody was going, oh my God, look where we bounced. We bounced right on the top side of the 1 SD. Made that run up to 14. And then the slow burn, where everybody's like, COVID was a black swan event. No, it wasn't. You could see this move coming in the charts way before then. And so it goes down. Where'd the COVID dump go to? the 3SD to the downside on that current monthly candle. It overshot it, I remember, by about $400 or something. But then where did it close? Closed right back up by the 1SD. Didn't quite get inside it, but definitely bounced right off the top side. That top side of the first standard deviation again. But now this is where I don't use normal too much anymore. I mean, we could move it here just to see. 27 little bars. Yeah. Plus gives a better read. But you can see, I mean, it almost the all-time high. It literally, and this was it over here. But hell, right here, we almost did a 3SD run. But I like the Laplace read when you get this this near to current. Found some support on the 95.4, but now it's a dip down below.
Yep.
So the question is, what are we going to tap the top side of the 68.3? If we do, we're sitting at $8,000 Bitcoin. About $7,900 Bitcoin.
Cheap Bitcoin.
That happens. Wow. Wow, wow, wow.
If that happens,
It could happen. That's why. You just move this right back up like we just did. What was that at? Damn, my bad. Heat. Right there on the down move.
the funny thing is, if you look at that chart, the last year and a half or a year since like May of last year, really, it hasn't really gone dramatically up. Okay, it peaked at around 69,000 back in November, but really, it's just been a down move since last May.
Right.
And like to say that we're in a recession is kind of funny. And those words are a lagging indicator, because if you look at the chart there, it's like, well, when you consider the correlation to all the other traditional assets and what they've been doing, also, like we've been well into a bear market for a while in that sense, but, for a good year or more, and that's okay. Like, doesn't matter if it's. I mean, 'cause again, we trade low time frame. It doesn't matter. You can have shifting opinions about big picture stuff all the time, but it's clearly the recession that is happening is not a new thing. That's why it's a recession. It takes a good couple of quarters just to technically tick it off.
Right.
Just to trigger it. We can see right there, like on those projections. I mean, look how much they nail them to the dollar. They're nailing those things, and so you don't have to pick a side. That's the beauty of trading math. You don't have to pick a side or be on a team. You can just trade the volatility, trade the VEPs.
Trade the VEPs. And so if we get a more, next 10 days, if that wasn't the low and this wants to go down, you've got on the current monthly candle, the 99.7 Laplace, right? Down there at about 11.8. Wow. But you've got the 95.4 Laplace on the distribution right about 13.5, 13.1. So if this price goes that low, you're probably looking for a nice big ass bounce from there.
MJ's throwing a pizza party or something. Gets down to 10.
Yep. For sure.
From all his shorts.
Easy giveaway.
Yeah.
They're all rug. They're not worth shit, but they're pretty. Profile pics. Where's he at? It's not going to stick up for itself.
But here's he'll probably laugh when he's editing the video.
Oh, good. Yeah, good stuff. And that's
WMJ.
Let me see. Get a big 15-minute move here. Spread this out.
Yeah.
Click on the sub move. I just like love the projections. Love it. Yeah, we could start down there. It's at 38.
Shout out to our indicator makers. Again, they're amazing. Ben F. and Donnie Brook, just incredible people making amazing tools.
Yeah. I mean, it don't matter. It doesn't matter what time frame. It doesn't matter what time frame. This is what A majority of people don't understand. And this is what's crazy. They're in the fucking echo chamber. They're echoing back and forth to each other that this shit doesn't work. And they just believe each other and they continue doing what they're doing. Instead of literally, yeah, I can jump on it right now. Literally, they don't understand the distribution. The distribution chart doesn't lie. Even this long one from the top side where you reject off the 99.7, you do a slow burn. Where did we bounce? The bottom side of the 68.3. Look at the candle closes. People are like, well, you're just putting that in a spot that blah, 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 blah. It's like, no, I'm starting this at a pivot in price action. This is a pivot in price action, right? My God, people are confused. But this is great. Great stuff. I mean, if I throw it right here, I can already tell by looking at it. 1, 2, 3, 4, 5, 6, 7, 8, 9. Let's throw it here. And I'm going to jump over on SPY.
I've been noticing some YouTube Jimmies, by the way, have been recently mentioning things like mean and standard deviation, which I find hilarious because they're talking about it as they're talking about it as standard deviation of price and mean of price. What do you guys even like? I have an economics degree. I'm like, well, you clearly didn't learn very much. These things.
Yeah, and they don't understand. They just
They have
it's
no idea.
insane, man.
Yeah, they just heard maybe they heard the word volatility or standard deviation from someone. They were reminded, oh yeah, you should talk about that, and then they just talk about it how it's price based. Like, no, literally, that's not how it's done.
No, not even close.
It is funny that that trend is picking up, and I will not be surprised to hear more of that as buzzwords spoken by fools who don't know what they're talking about in the coming weeks.
Right. Rain or wreckage. Wreckage. Boop, boop, boop. Yeah, where did that even start? Not on a down node. I'll put this. That would be a good spot right there just to see. Let me see something. Had a nice day today on SPY. That was a no-brainer.
Where's my indica?
That was a no-brainer.
Where's my indica?
Indy.
Not my indicator, just my indica.
Right. Yeah, kind of no man's land. Need to drop this down. What am I on a weekly? Let's this on a daily. This make more sense. Is it 2 more? Yeah. 14. Oop. All right. Need to get back up inside of 95.4. You can see got a rejection late day on SPY right there. Boop. Pulled back a little bit. I want to see this pull back up inside, back up to the 68.3. Chromos. It's at all-time high. Is that it right there? For no. Riding my bike earlier. I got something in my damn throat. Let's check. This is what I want to look at. Where you at, SPY?
32-cent XRP. Oh wait, no, SPY 375.
And I was watching this pre-market this morning. Got up early. First thing I noticed immediately was this tight, super tight price action volatility range. In fact, it didn't even wait. It trended pre-market. Woo! Right? Literally trended up to the 1SD and above the center of the new weekly range. Here's the thing. It's daily range. Hello. So does SPY have another dump down the 365 to test this untested daily? Those areas usually get tested. But had a great day, nonetheless. Had a real good day. And we are above the weekly. I don't trust it, though. I don't trust it. With this tight of a range down here. That's the thing about SPY, though. Like literally the last candle of last week. Oh, no, that was Monday, Jesus. Oh, yeah. Last candle, because Monday, SPY wasn't open. It's definitely right there. That's one thing, because I haven't dove deep enough into freaking traditional markets with this indicator to see if it reacts the same as crypto. They usually do. But it was a good move by SPY. What does, let's see here. Where are you at? There's triple Qs. Yeah,
Yeah.
same thing.
If there's a tight daily CBR, tight daily range, P-Funk, you tend to get more trending moves. And if it's really wide, you tend to get more ranging moves.
Let me see something. Where did that SPY pre-market open? Because that might have been tested. Yeah, I'll
Hey.
tell you what. Thing pre-market opened right there. So if this baby wants to take off, she's good to go. What's that top sign? Okay, boom. There's the weekly R1. Where's the R2 at? 392. R3 is 400. If SPY wants to take off this week, you're not going to see this thing above 400. That's for sure. And what is this? The daily? No, I want the new weekly. So the 95 for Laplace, 382. The 2SD is probably right around 385, 3SD 400. Yep, close. So that would make sense. So you've got the top of the overall weekly range and the 3SD on the weekly on SPY in the same area. Close enough anyway, for sure.
Plan B. IMARS. Plan B. What's our plan B if everyone starts volatility trading? To keep doing it because they're going to suck at it and they're going to lose money and overfix. And they will still be the liquidity on the other side of our trade.
It is what is so great is that
I mean,
and
look at the effort it takes to learn, right? And you think the average trader is ever going to have that kind of dedication to learning how to trade, or you think they're just about degen enough to get on and push the green button at 10x leverage, which is pretty much what they did.
yeah, we're never going to have that problem because that is so strong. They are not going to let themselves be clowned upon by their peers. They're just going to stay, even if they know. Well, I've had enough of this crap. I'm losing money. I want something new. They'll get dragged right back in. Yeah, P-Funk for sure. It does. It takes a little while, but man, you start understanding it and you start seeing it. It's like, what the hell have I been doing my whole life?
Yeah.
How did I not know about this? Because nobody's teaching it. The only ones using it are the algo traders and the high frequency trading firms, really.
Yeah, the wizards behind the curtain, and they don't want any, the bosses that own them don't want anybody to hear from them as much as possible.
And I get that a lot too. Well, why isn't it? If it's so good, why is nobody talking about it?
Right.
Well, we're talking about it.
And it has been covered even by like large documentaries and stuff. We put the links to them up and everything, like it is. But yeah, a lot of people trading TA just don't know this stuff because they get all they hear 99 times out of 1,000, 100 times out of 100.
Yeah.
All they hear is the nonsense. They never hear the volatility stuff.
And the
And
guy
when they hear volatility, it's all wrong.
it's the same one that's
yeah.
scamming all the retailers.
Yep.
They're pushing traditional TA on the retail traders, and I'm not even gonna lie, on a lot of traders, not just retail traders. There's a lot of professional traders out there that use traditional TA. But it's like, they're not gonna sit here. They're not gonna go on YouTube and tell people how to trade volatility. They don't want people to know how to trade volatility. They want people to trade volume. They want people to trade the order books. They want people staring at the RSI and the fucking 200 simple moving average and stuff like that. Yeah, they want people looking at the volume. They don't want people understanding volatility. That's why if I go in any other Discord and I use abbreviation and I'm talking about volatility and I just put VOL, everybody's like volume. He's talking about volume.
Exactly.
No,
I'll assume that. Nope.
about volatility.
Yeah.
The only thing that matters.
And it ain't based on price.
Yeah, who wasn't? I had the VPVR on my charts.
Yeah.
That's what I used. I wanted to see where those very important volume nodes were.
Right.
Oh God, when it doesn't matter. Doesn't matter.
You can have super high volume and price doesn't budge because volatility. You can
Yep.
have super low volume and price flies through the roof or goes through the floor because volatility. It's just amazing. People trading volume are just literally trading noise. They're literally trading noise. They have no idea what they're doing when it comes to using that indicator.
Yeah.
Yeah. Who's going to protect you?
Yeah, exactly. There's none. I got tricked.
Protection. Yeah.
Sure did.
Maybe you shouldn't have been trading leverage on an asset you don't even understand. Using tools you don't even know what you're doing. That don't tell you anything.
Right.
Yeah.
It's like you're all sitting in the hen house and you're asking the fox for a refund.
Yeah. And the thing is, if you're sitting here and listening to this video, right? If you're not part of this live stream, if you're just watching this on YouTube, like, first of all, congratulations, you're here and you're hearing us rip apart Voodoo TA stuff. Understand, it's not that we hate the traders at all. It's just that it's insane that people get duped so much, and it's like it's heartbreaking, but it's funny because it's so sad. On the one hand, but on the other hand, we have sympathy for the people who are getting their asses handed to them by trading badly, and that's why we're here, because it's like, well, you can you want to join us and come and learn how to do this stuff. We're here, but like you don't want to, hey man, keep trading what you're trading, whatever makes you happy. Like we're not here to preach to you that you have to join us and do this silly stuff. You want to learn? Come learn.
This is funny.
I'm ours. SEC FINRA is.
Here we go.
Oh, I'm joking. He's joking. Okay. Oh, SEC FINRA, in case you're not familiar, is a Securities and Exchange Commission, financial regulation authority or agency, whatever administration. I don't know. It's one of the alphabet soup names, but that's what they do. They regulate the markets in the U.S. They're one
Yeah.
of the
And
markets.
people are like, well, they're supposed to protect us. It's like, is that what you think they're doing?
I tell you who they are protecting.
Yeah.
They're protecting
They're making sure
the-
you don't make money and that all the big banks just cheat their way to the top. That's what they do.
If you are the establishment, don't worry, they're there to protect you. But if you're not the establishment, you better stay out of their way.
Right. Yeah, they're just a regulatory agency. Yeah. But yeah, it's all crazy. No, good stuff. Let's wrap her up. Let's get back at it tomorrow. Let's see how I'm gonna be keeping an eye on NASDAQ through the night. The E-minis. See what's gonna happen tomorrow. I'm in the camp where when have they ever made this easy? Right? Without if this thing's gonna continue down into the low teens or something, there's a lot of shorts they gotta scrape off. We'll see. And it doesn't matter at this point because these longs are just going to continue to add on. Continue to add on. Almost 450 more today. It's just ridiculous. The lower it goes, the more longs a pile on. Either there's going to be just a catastrophe, like a meteor is going to hit the planet, or this thing's going to turn around. We're going to get a bounce back to 40 at least. Something's got to give. I've just never, especially crypto, I've never ever seen it. They're not going to make it easy. They want to leave people with all their teeth knocked out,
More profitable that way.
eating ramen. That's what they want.
Working at McDonald's or whatever.
Working at McDonald's. Yeah, P Funk was. It was a great hour. Jeff, we'll be back at it tomorrow, 5 p.m. Eastern Standard Time. I'll check you guys later.